There is a 3-digit number that quietly controls your financial life. It can decide whether you get approved for a home, a car, an apartment, or even a job. And yet, most people have no idea how it is actually calculated. Banks know exactly how it works. Credit card companies know. Mortgage lenders know. But almost nobody teaches you. Today, that changes. In the next few minutes, you will understand your credit score better than most adults ever will. What creates it, what destroys it, and how to use that knowledge to save yourself tens of thousands of dollars. Let's start with the basics. A credit score is a 3-digit number generated by a mathematical algorithm. It summarizes your entire credit history into a single figure. That figure represents how likely you are to repay money you borrow. In the United States, scores run from 300 to 850. The FICO model is the dominant one, used by over 90% of top US lenders. Here is what most people miss. Your credit score is not stored somewhere as a fixed number. It is calculated fresh every time a lender requests it. It is based on what is in your file at that exact moment. Your score literally changes every single day. So what actually goes into it? Your FICO score comes from exactly 5 factors. The biggest is payment history at 30%. Just one payment that is 30 days late can cost you 50 to 110 points instantly. Next is credit utilization at 30%. This is how much of your available credit you are actually using. Most people think staying under 30% is fine, but it is not optimal. People with scores above 800 average just 5.7% utilization. The third factor is length of credit history at 15%. This is why closing old cards can hurt you. Never close your oldest card. The fourth factor is credit mix at 10%. Having both cards and loans helps. And the fifth factor is new credit at 10%. Every application creates a hard inquiry and a small dip. Multiple applications in a row look like financial desperation. Now, what counts as a good score? A score of 800 to 850 is exceptional, earning the best rates on everything. 740 to 799 is very good, close to the best rates. 670 to 739 is good and gets most products approved. 580 to 669 is fair, with limited options and higher rates. Anything under 580 is poor, and most applications get declined. Let me show you why this matters so much. Imagine a $300,000 mortgage. With a score of 760 or higher, you might get a 6.5% rate. Total interest paid, about $282,000. With a score of 620, that rate could jump to 8.0%. Total interest paid, about $392,000. Same house, same loan amount. But that lower score costs you $110,000 more over 30 years. That is not a small number. That is a decade of savings wiped out by one 3-digit number. So let's talk about what damages your score. Here are 7 things that hurt you. First, missing payments, even a single minimum payment. Second, high utilization, which penalizes you every cycle above 30%. Third, closing old accounts, which removes both age and available credit. Fourth, and this one surprises everyone, co-signing for someone else. If they miss a payment, it hits your file too. Fifth, applying for too much credit in a short window. Sixth, small unpaid bills going to collections. A $30 bill can hurt you almost as much as a $3,000 one. And seventh, having no credit file at all. If lenders cannot assess you, they often decline you automatically. Now for the good part. Here are 6 strategies to improve your score, starting with the fastest. Strategy 1. Get your utilization below 7%. Pay down balances. Request a limit increase. Or pay before the statement closes. This alone can add 20 to 50 points in a single billing cycle. Strategy 2. Dispute errors. 1 in 5 Americans has a verified error on their report. Check yours for free at annualcreditreport.com. Fixing an error adds about 25 points on average. Strategy 3. Automate every payment. Set your accounts to auto-pay at least the minimum, always. Willpower fails, but systems do not. Strategy 4. Become an authorised user. Ask a trusted family member to add you to their oldest, well-managed card. Their good history can lift your score. Strategy 5. Use credit builder tools. Options include Experian Boost, secured cards, and Self.Inc. loans. Strategy 6. Stop applying blind. Pre-qualify first, using soft searches that cost you nothing. Every hard inquiry can cost you 5 to 10 points, so always soft check first. Here is the truth. Your credit score is not a mystery, it is just math. And now you know the math. Use it, protect it, and let it work for you instead of against you.